Vindication. By Theodore Butler. Posted 9 February, 2009. New data from the CFTC provides the clearest proof to date of a manipulation in gold, thus vindicating the long-held position of GATA, the Gold Antitrust Action Committee. It is my hope and expectation that GATA, run by Bill Murphy and Chris Powell, will take the evidence and do everything in their power to ram it down the manipulators' throats and end the gold and silver manipulation. I would like to offer further evidence of manipulation with the intent of convincing the staff of the Enforcement Division of the CFTC of the continuing crime in progress. In somewhat of a twist, I would call on all gold proponents and investors to study this evidence, as it pertains mainly to gold futures trading on the COMEX. The evidence is found in source data published by the CFTC in the form of their weekly commitment of traders, COT, and monthly bank participation (BP) reports. The bank participation report for positions as of February 3 indicates that 3 or fewer U.S. banks hold a record short position in COMEX gold futures of 111,190 contracts, over 11 million Oz. An increase of 28,690 contracts from the January report. The previous record short position by U.S. banks was 86,398 contracts in the August bank participation report. In other words, the current short position held by 2 or 3 U.S. banks is almost 30% greater than the previous record. After the previous record August short position was reported, gold prices fell almost $200 over the next 2 months. Will that happen again? I don't know. What I do know is that, if gold prices do suffer a sharp decline, it will only be because this manipulation by 2 or 3 U.S. banks was successful. Allow me to put the concentrated short positions in gold and silver into perspective. As the February BP report indicates, 1 or 2 U.S. banks held a 29% share of the COMEX silver market and 2 or 3 U.S. banks held a 32.1% share of COMEX gold futures. Of the 73 markets covered in the report, no other market has a U.S. bank percentage even close to silver and gold, save the smallest market listed, 90-day Euro-Yen Timber. Please keep in mind that the Hunt brothers and all their reported associates had a futures market position, COMEX and GBOT combined, that was under a 10% share of the total silver futures contracts outstanding at that time and were charged with manipulation. What are short positions 3 times as large also manipulative? As large as the current gold and silver percentages of the market held by 1, 2 or 3 U.S. banks may be, those percentages are grossly understated, because spread positions are included in open interest totals. Remove all spread positions, non-commercial and commercial, and the share of the market held by 1 or 2 U.S. banks in silver rises to 41.5%, and not 29%. In gold, the share of the market held by 2 or 3 U.S. banks is really 45%, not 32.1%. How could 1 or 2 traders holding 41.5% of any market, or 2 or 3 traders holding 45% of any market not be manipulative? When the market share of the 1, or 2, or 3 U.S. banks in silver and gold are compared to the total share of all commercial traders, the result is truly shocking. In silver, the 1 or 2 U.S. banks account for more than 81.6% of the total net short position of all commercial traders. In gold, the 3 or fewer U.S. banks account for more than 62.3% of all commercial shorts. With such a lion's share, these big banks completely dominate and control the gold and silver markets. Lastly, by comparing corresponding COT and BP report data from January 6 to February 3, I can make the following statement. The entire net increase in the commercial short position in silver and gold, 2,500 contracts in silver and 28,000 contracts in gold, basically came as a result of new shorting by the big U.S. banks. In other words, neither the 5 through 8 largest traders, nor the 9+ commercial traders, the Raptors, changed their positions much during that period. Almost all the selling was by the big U.S. banks in both silver and gold. Ask yourself this, what would the price of gold or silver have been if these big U.S. banks hadn't sold short in such quantities? How can that not be manipulation? It appears obvious that the CFTC began its current silver investigation as a result of revelations in my article The Smoking Gun, and because many hundreds of you wrote into the commission. Without that public participation, there would have been no investigation. But one thing always puzzled me, namely, why did that investigation appear to center on silver? What about gold? After all, in my article, I highlighted the extreme concentration on the short side of COMEX silver and gold futures and asked how it was possible that such concentrations could not be considered manipulative in both markets. Make no mistake, the silver market is the most manipulated market in the world. But gold is close behind. The latest data from the CFTC confirm a manipulation in gold. Gold people should not tolerate it. Since there must be at least 100 times more people interested in gold than are interested in silver, their collective voice could be forceful. The evidence in the February bank participation report is clear. 2 or 3 U.S. banks held a record net short position equal to 15% of total world annual production of gold, a staggering and unprecedented number, exceeded only by the absurd percentage in silver, currently 20%. In every reasonable measurement of market share, 2 or 3 U.S. banks are completely dominating and controlling the gold market. All according to government data. Who gave these U.S. banks the right to manipulate gold prices? The U.S. Treasury Department. Why are banks who are receiving taxpayer bailout funds even shorting gold and silver in the first place, especially at a time when so few other big entities chose not to? Shouldn't they be looking to make loans to real people and businesses and leave market speculation to others? Are there no honest market regulators left? I sure hope gold people get to the bottom of this and give these crooks what they deserve.